Starting off here on the hourly time frame. Okay, so I've used the rewind tool a little bit too. So basically at New York Open right now, we had news get announced and we had a big sell off to the downside, taking out this low to the left. Okay, now why is this valid? You always gotta ask yourself. So I know I teach you guys all these things about running these levels, this liquidity points to the left hand side and stuff like that. But the reason why we want to see price below here is because after we run this, just imagine there to be liquidity below it. After we run it, we expect a run the opposite way, the opposite direction, okay? And that's what we're trying to hunt for, that buy the opposite way, okay? So with that knowledge of us running that low, we are now trading at a low down here. We have an inducement high to target up here, okay? Now we just need the lower time frame to confirm us an entry, to give us an entry. That's it. So right now we have direction. We have an idea of where we want price going, right? We got that higher time frame raid to the left-hand side. All right, coming from there. Now we want the lower time frames to give us that entry. Okay, so price runs higher, okay, respects the highs. Now if we trade away from the highs, we now have liquidity right here. Look how we've now engineered liquidity at the highs. So now we have that reason to push higher, right? So how do we get involved in this? Well, one idea would be below this inducement low here. Okay, so if price came below here, this would be a buy position into the highs, right? Simple stuff. Okay, so instead, price respects the inducement low, okay, and trades higher. Okay, so now you gotta ask yourself, what can happen next, right? We still want price to the upside. How can we get involved in this still? Well, let's continue with price. Now we're building more liquidity at the highs. Okay, so now we have even more of a confluence to run to the upside. Now, in order for us to attack the upside and run highs, we need to get that entry. And how do we get the entry? We need to take it below liquidity, right? So if buyers, you ask yourself, if buyers entered the market, where's the liquidity going to be? Well, right away I can see this. Since price respected the highs, left liquidity at the highs, we retrace back down to the lows, induced buyers at the lows here. So if we have buy positions, where are they going to have their stop losses? Tuck below this inducement low, sure, and also below the structural point down here, right? They get in like this and they want to go higher. Okay, simple structure stuff, right? High to low, they want to go higher like this. So automatically, we're going to have tons of liquidity below this low. Now, I'll give you guys an example. Let's say, to rewind this a bit, let's say price actually came up and took this high and then retraced back down. Well, now where's liquidity going to be? Well, buyers are going to be induced to buy here. So we're going to have liquidity below this low, right? So a buy position below this low would be valid, okay? But instead, we did not do that, right? And we respected the highs, just engineered more liquidity at the highs, and we came lower, okay? So now liquidity is going to be below this low. Buyers entered here, liquidity below this low down here. So now, in order for us to get involved in this trade, we want to see price trade below this low, sweep that buyer liquidity, okay, and then expand to the upside to take out the sellers here and also this inducement high up here. Okay, so that's the whole thought process behind this move. Look how we come down to the low. I think we even run this inducement low here. Yeah, we run it right now. See, we still get a little reaction, but that's not what we're looking for, right? We're looking for that buyer liquidity to get taken, and that's below this low here. Okay, now getting involved in this trade, now we're trading below it. You can simply wait for an entry model, or you can wait for some sort of rejection, a liquidity block, whatever it is, whatever you guys are comfortable taking the position with. And yeah, so I simply just waited for some sort of candle close to the upside. Now we have a possible liquidity block at the low here, right? So we can come back and retest that. So I took it when we closed bullish here and we left that liquidity block. Now where can my stop go? Well, since I'm targeting these highs, okay, and also these, I'm looking for around what, like a 60 to 80 pip move, right? So I'm okay with opening my stop a little bit here. We have a 10 pip stop to the low. So let's open it up a little bit. Let's go 15. We can even go a little bit more, 17, 18 pips, no problem. because look at the target we have to the upside. So it gives you that opportunity. If your entry is not perfect, let's say it comes down and spikes below the low again and then runs, I'm still involved in the entry, right? Because that direction is clear, right? Our bias is clear for this trade. We come down, retest the liquidity block, respect the low still, so we're not hanging out, and then we get that expansion to the upside, right? Take out the equals over here, little pullback, and then a continuation. We continue higher, 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 all the way to that inducement high. Okay? I hope you guys learned a thing or two on this. There's definitely some pointers you guys should be taking some notes possibly, or rewatching the case study maybe. But yeah, just a quick one for today. Just wanted to get this one out there for you guys. So I hope you guys enjoyed, and I'll see you on the next one.